When you check your bank balance, you might assume you are looking at state-issued cash. You aren't. Between 95 and 98% of the money we use every day is actually created privately by commercial banks. This animation illustrates a process called fractional reserve banking. When you deposit 100 euros, the bank doesn't lock it in a vault. They lend the majority of it out to someone else, who deposits it in another bank, which lends it out again. This process multiplies the money supply far beyond the physical cash that actually exists. Because your digital balance is built on these overlapping loans, it carries an inherent risk. If a commercial bank collapses, any deposits you hold over the government-guaranteed threshold can simply vanish. The digital euro provides a definitive solution. Unlike your current bank balance, it is defined as public money. This means it is a direct liability of the European Central Bank. Because a central bank possesses the exclusive authority to create money, both physical and digital, it mathematically cannot go bankrupt. By holding digital euros, you take the absolute mathematical safety of a central bank vault and place it directly into your own pocket. You might hear digital currency and immediately think of Bitcoin, but the digital euro is a separate concept. It will have a stable value, avoiding the wild price volatility of crypto, and it operates without the massive energy demands of blockchain mining. Cryptocurrencies also suffer from a severe privacy flaw. They offer pseudonymity, a false sense of anonymity. Because every transaction is permanently recorded on a public ledger, any payment you make can theoretically be traced right back to your identity. Our current electronic payment systems offer zero privacy either. Every time you tap your card or phone, your bank, Visa, or MasterCard logs exactly where you are, what you bought, and how much you spent. The digital euro is built to solve both of these issues. For everyday microtransactions, it offers the exact same untraceable privacy as physical cash, but packaged in a modern electronic format. You won't even need an internet connection to use it. Using a smartphone or a physical smart card, you can make offline payments between devices, similar to how a tap-to-pay transit card works even during a power outage. It will also be classified as legal tender. This means merchants are legally obligated to accept it. Neither you nor the merchant will pay extra transaction fees, removing the heavy toll currently extracted by private card networks. If this digital wallet is risk-free, free to use, and completely private, the logical next step would be to move your entire life savings into it. So why shouldn't you? As this diagram shows, if everyone drained their commercial bank accounts, we would face a crisis called disintermediation. Without those deposits, commercial banks would have no capital to issue business loans or mortgages. The resulting freeze in credit would trigger a severe economic recession. To prevent this, the European Central Bank plans to implement a strict holding limit, likely around 3,000 euros per wallet. This deliberate cap protects the lending power of the broader economy while easily covering a citizen's daily spending needs. A strict 3,000 euro cap creates an immediate practical problem. What happens if your employer sends a 5,000 euro paycheck directly to your digital wallet? The system uses the waterfall mechanism. Funds fill your digital wallet container until hitting the exact 3,000 euro limit. The remaining 2,000 euros do not bounce back. They automatically reroute into your traditional linked commercial bank account. By utilizing this overflow logic, the system guarantees you will never experience a blocked transaction. It bridges the safety of the digital euro with the storage capacity of traditional banking. Zooming out, the digital euro addresses a massive geopolitical vulnerability. Right now, approximately 70% of all digital payments in Europe rely entirely on American corporate infrastructure. A fully realized digital euro establishes a sovereign 100% European payment network. This isolates the continent's daily commerce from foreign political shocks and degrading international relations. It also overhauls how Europe fights economic crises. During the 2008 crash and the recent pandemic, the central bank injected massive amounts of money into commercial banks to stimulate the economy. But out of fear, those commercial banks hoarded the cash instead of lending it to the public. The digital euro bypasses this roadblock entirely through direct pass-through. The ECB will have the ability to adjust interest rates directly inside the digital wallets of millions of citizens, instantly influencing whether people choose to save or spend. It also enables a concept known as helicopter money. If an area is devastated by a crisis, like the severe flooding in Thessaly, the central bank can instantly distribute financial relief exclusively to the wallets of citizens in that specific geographic region. Europe is transforming its monetary policy from a blunt, slow-moving instrument into a surgically precise economic tool. This precision is powered by the integration of smart contracts. The central bank can take that targeted relief money and program it with specific behavioral rules. For example, funds distributed during a crisis could be programmed so they can only be spent at grocery stores or energy providers. This guarantees the money directly stimulates the sectors suffering the most. The money can even be given an expiration date. If citizens receive a €300 stimulus, the funds can be programmed to vanish if not spent within 3 months, preventing people from hoarding the cash and forcing it to circulate through the economy. Most importantly, the central bank will no longer have to rely on GDP statistics that are months out of date. The digital euro will provide real-time, anonymized data, revealing exactly how money is moving across the eurozone, second by second. This infrastructure secures Europe's financial autonomy, converting the flow of daily transactions into a high-precision tool for steering the continental economy.